Good morning, everybody. Welcome to the Flow Show, Wednesday, 20th of November. And we have a surprise guest, K-Man. Welcome to the Flow Show.
Morning, Ryan. Good morning, everybody. I hope you can hear me okay, because I needed to upgrade and update Zoom. But yeah, I'm back and very happy to be back with you, Ryan, and with everybody.
Yeah, good to have you back, mate. And yeah, you haven't missed much.
Just a small election somewhere.
Yeah, just a small election, bundles of moves and wars and whatnot. So yeah, just same old, really. But yeah, good to see you back, mate.
Cheers.
And no doubt it was probably going to take you a couple of days to get back in the saddle. But yeah, we'll welcome you back, of course. Right, let's get stuck into it. China, they had their LPR rate decision overnight. They left rates unchanged there, so they don't wish to do any more as far as rate goes, rate changes for now. They still continue to fix the one reference rate at 7.19s. It's up to 7.1935 from 1911 yesterday. So sticking to that 719 handle pretty conclusively. Right, as we started yesterday's Flow Show, we had a lot of BOE wafflers going on at this Treasury Select hearing. Fortunately, I didn't have to listen to it for doing the show, but I go through just a couple of the pertinent headlines from that. MPC member Taylor said gradual rate cuts is closely aligned to the market curve currently, and that's about 100 basis points over the next year. Although that's slightly different to what we're showing in markets at the moment. So maybe he needs to update his input charts there. It says risks to inflation are almost all to the upside. One of the big hawks, man, said forward-looking price and wage indicators have been flat and above target for 4 months, and it raises the risk of inflation. It says it's important to keep rates on hold, not pursue a gradualist strategy of rate cuts, which is going against the boss man. The boss man, Bailey, called or says that the economy calls for a gradual approach to rate cuts. Says a gradual approach to removing monetary policy restraint will help us to observe the risks to the inflation outlook. He says that recent evidence has been that inflation has been lower than expected, but we don't know if that will continue. Well, I can tell you right off the bat, it hasn't continued. This morning we got a lot of price data in the UK, most importantly CPI numbers, and CPI went up above expectations. Was expected to jump from 1.7 to 2.2. It jumped to 2.3. The core number went higher as well. It was expected to come down a pip, went up 2 instead. Now, there's a lot of input here from the energy price cap, which rose in October. But that core measure is a worry because the core tends to lag the headline number by a few months. So that won't be affected, or shouldn't be affected by that energy price rise. That should be seen a bit further out. But nevertheless, still higher, stickier inflation. Although there was a bit of a change in the PPI numbers, so a little bit softer there. As you see, not as high on the month. Year on year, it was down more, down 2.3%. That's for input prices. So that's one of the inflation aspects there. So prices producers are paying for goods came down year on year 2.3%. Output prices, so this is effectively what they are charging to sell on those goods that they produce, down year on year as well, down 0.8%, flat on the month. So PPI was a little bit softer. RPI, that's the retail price index, shops and whatnot, that was much higher. So overall, still sticky, but there are still some disinflationary signs. What that has done, though, is got the market screwing down on further rate cuts from the Bank of England. There was a Reuters poll on what they're going to do in December. And all 66 economists expect the BOE to stay on hold in December. That's versus the last poll in October, where 46 out of 72 polls said they'd hold, with the rest voting for a cut. It's also dialed down, as I said, expectations for rate cuts into next year. Taylor saying that 100 pips have been priced in. Well, it's a bit less than that now. Mark had it in our chat room. I think it was 60. I'm going back and check. He says 63 pips by deck next year. So not an awful lot being priced in. Maybe there's a bit of a risk that inflation catches up to the downside a bit more, or picks up to the downside a bit more, and then we see the pendulum swinging the other way. Moving on, let's go and listen or look at what those bonds are doing over in Germany. We did get a bit of data out from them as well, price data, PPI, coming in round about unexpected on the year-on-year numbers, a little bit higher month on month, but nothing notable that says inflation is going to start booming in Germany, although we did see a pickup in the last monthly report. While we're in Germany, I'll look at the Eurozone, had some wage data out as well. I don't know if it shows it on this calendar. No, it doesn't. But they had Q3 negotiated wage growth data, the ECB, that jumped to 5.42% from 3.54%. The Bundesbank had a comment on that in advance. They said the German economy is to stagnate in Q4, and although this line is likely referring to their own situation, they said negotiated wages likely peaked in Q3. So they had obviously all the IG Metall unions and all the wage negotiations with auto firms and engineers and whatnot. So they say that's going to peak then. As I've just mentioned, inflation did go up in Germany in the last reading. So we'll see if that's a peak or not. ECB's Muller doesn't see any reason to move in bigger steps now. So he's in the 25 camp. ECB's Panchetta says that it's not a blasphemy that rates could go below the neutral rate. It may not be a blasphemy, but they wouldn't like it to go there below neutral. Otherwise, they'll end up chasing the market down and chasing inflation down. Again, I mean, there's a bigger problem. Kay, anything comments you got on that data? Maybe the Bank of England?
Well, first of all, yeah, I mean, coming back to that one, we've seen the rates move, expectations move with it. It does look like not a lot has changed over the past weeks to that respect, and moves in the bond market look also obviously driven by the Trump election and war situation. But we're still in this bond market that is going to move pretty abruptly with every single situation data point changing. So the thing is, the risk is to perhaps read too much into data points compared to the bond markets. The bond markets seem to still be a bit jittery, overreacting on to a certain extent. So that is still at play. And looking at the time of year we're in, and that was one thing that I was thinking about this morning. We're going into the end of the year, and for us traders, we should, I think, be prepared to see a continuation of those kind of reactions, because people are going to start to manage their books for the year end, which sometimes already starts middle of November. But I think there's more important things going on, like the election, the war situations, left, right, and center. So I think we should expect more of those little or bigger overreactions on everything that's happening. So that is one thing that I noted, because a 0.1, 0.2, I know about the expectations for the Bank of England changing here and there, but 0.1, 0.2 moves on inflation data as on their own should not be moving sterling yields by 10 bps. I mean, it's a bit overdone, but I do think us as traders, we need to be ready and be mindful that we may still see overreactions in bond markets across the board. Because it's going to react to Trump nominations, for instance, as well. So that is something that we need to bear in mind. And also, as we have seen, and today's reaction on the sterling is pretty telling, I would say, also that we've seen that the reaction in the FX market is instant compared to what the data point and the bond market does, and then tends to fade. And the sterling reaction this morning is a very good example. We jumped over 127 in the cable and then started to fade straight away. So those are things that we are going to see more of into the year end. Okay, so data point, instant reaction, bond market reaction, FX reaction, and then pick up what you were doing before, really.
Yeah, absolutely. We've been watching bonds, particularly tens, very, very closely over the last couple of weeks since the election for what's happening there. But we'll look at those in a moment. Let's crack on to the US and some of the data we had out yesterday, US and Canada. Firstly, housing starts and building permits a little bit softer. Nothing to shake anyone out of any trees. Just a little bit of softness there, but well within the sort of numbers that we've been getting lately. Canada CPI, that was a bit of a ball buster to the upside. Strong CPI numbers coming in on the headline, rising above expectations, 2%. The Bank of Canada core measure also rising a pip to 1.7%. And then pretty much most of their other 30 ways of counting inflation went up as well. So that it hasn't changed the market's view of the Bank of Canada cutting again in December. It's just obviously we've come down in expectations of another 50. So we're pricing more to the 25 side than we were going into the data. As I say, the market's still expecting a done deal that they do cut again at their final meeting, but likely it might be a 25 rather than a 50, but who knows? We've got plenty of water to go under the bridge before we get there, but hot data anyway from Canada. Just on that rate expectations after that data, a 50 bit cut went down to a 20% chance versus 38 before the data. So it wasn't heavily siding with a 50. But it reduced nonetheless. But there's still a couple of banks out there still calling for a 50 at their next meeting. Been quiet at the Fed, but we did have Fed's Schmid saying that it remains to be seen how far rates will fall and the inflation fight is not done yet. Banxico Governor Rodriguez said that considering the progress they have with disinflation, we can continue cutting the benchmark interest rate. So they're going to keep their foot on the pedal regarding easing. Now over to all the geopolitical stuff going on that rocked markets a little bit yesterday. It was a bit of a two back and forth with headlines coming out and whatnot. Some of the strongest comments coming from Russia's Lavrov, as they tend to do. He said a bit of placatory comment that Russia's position is that nuclear war won't happen, but then later on he said we will respond to the targeting of Bryansk with American missiles in an appropriate manner. And then overnight, the US decided to pretty much abandon its embassy in Kiev under the threat of an attack from Russia. Overall, as I said, there was a bit of back and forth. There was no real step up in rhetoric versus what we'd heard originally. That doesn't mean it's all over. We have seen risk turning a bit better this morning, likely on the fact that nothing more massive has happened. But I don't think we're out the woods yet. Okay, we've been talking about this escalation for a couple of weeks now, if not longer. it's happened, it's here. It just means the level of headlines we get might be stepping up a gear. Bigger attacks by Ukraine into Russia, bigger responses by Russia, that sort of thing. So we're still in a position where the situation may escalate in terms of actions and the market paying attention to it. So yeah, got to be careful with these headlines. Mr. Trump, apparently, this is good news for all you crypto fans. He's going to replace the chairman of the SEC, Gensler, with someone who's in favour of cryptos. That's one Teresa Goody Gillen. So she's going to be sitting in the hot seat, and she loves a crypto. Probably why cryptos and Bitcoin are on their uppers again once more today, trading up around 93,000, if I'm not mistaken. Not far from that 100 grand mark. That's going to be a big psychological level. As for the rest of the day, particularly with stocks, everyone's waiting for the Nvidia earnings. So you better go find some grass to grow until that happens. Kate, anything out of that lot? Banksico, they look like they're going to stay on the cut path as well. What's that going to do for the carry mob?
I think they have to stay a bit on the dovish side for economic and political reasons right now. Unless Mexican peso weakens a lot further, then they may change their tack. But I think in Mexico they must be holding their breath to see what's coming once Trump takes the seat. The government that he's putting together is a hawkish one. It's going to be one that is probably going to try at least to do a lot about immigration and things. We know that there's been a lot of it from the Mexican side as well. So I think for the time being, politically, they need to remain a bit on the dovish side over there, and then see what happens once Trump gets into the seat. What really happens, and then perhaps they can start to adjust also to the other side. Yeah, for the rest, I think you're right. I mean, those geopolitics, we shouldn't expect headlines every day, but we know what the Russians have said, or of those US and UK saying that they can use their weapons into Russia. I think it's going to be an ongoing story for a while. I don't know. I don't know how far Putin wants to go. It's always an open question. We just don't know. We just know that it's going to keep everybody on its toes. The markets, in the meantime, are pretty sanguine as they usually are. You get the announcement or the headline move. We've seen it in gold and some and yen and Swiss the other day or yesterday, and but then the market is going back onto what's next, and yeah, that is a bit rejoining what I've said earlier about the bond. So, but yeah, I just think it's everything is looking gloomy for the time being. That's the only thing I can say about everything.
Yeah, exactly. We've got lots of political messes going on. I was just talking to someone earlier. We also got the political problems in France, Canada, Germany, Japan, all over the place. There's political problems. So yeah, it's
Yeah, on the Japanese side, it looks like Ishiba, at least. I mean, and that's actually what I already said before taking the break. Ishiba, I think on the what is it, the stimulus plans, he is probably going to find support, because nobody in Japan wants to go against stimulus plans, right? So
yeah,
the stimulus packages, they will continue to roll in. So from that side, perhaps the political situation in Japan is not one to be overly worried about. It's going to, I think it's going, the situation over there is going to get a little bit more uncertain once Trump gets into the seat regarding foreign policy, defense, and all of that lot.
Yeah,
I think,
I think it's going to come down to the, it's okay saying, yeah, we'll give stimulus, and then when it's going to go into the budget, that's when the bum fighting will start, I think.
yeah, as well. So I think for the Japanese situation, I think we already need to look out to next year.
Yeah, very much so. Right, let's have a dig into prices then. And as we've been saying, we have had a little bit of reversal in a lot of prices that got affected by the news yesterday. Euro Swiss was one that took a bit of a bashing. That's recovered somewhat. And it's as I said yesterday, when you get these geopolitical headlines, you've got to pay attention to them, but also be mindful of what trends were happening beforehand. Obviously, Euro Swiss isn't that much of a good indicator, but it's been in a downtrend, so that had a little acceleration there. Path of least resistance, we're back up, but we're not making new highs or anything. Dollar CAD, I'm kicking myself over because I wrote might fancy dipping back in to this one. I closed up the rest of my position yesterday, my longs, and when I posted that, I think we were trading 62, 63, and now we're trading up near 140 again. So I missed that. But again, this trend isn't for turning over those geopolitical headlines yesterday. We get more and more and more, then that's a different story. But so when you're trading these headlines, if they recede, if the rhetoric calms down, a lot of assets that moved on those risk headlines are going to go back to what they were trading before. So this one potentially is back on the wagon. Obviously, 140 is we're going to have to see whether it's going to be a tough nut again, or whether we're just going to carry on going through and go back up towards those highs. Yields, of course, is the big story, or the big asset you need to keep an eye on. Again, we had this move. Now we're coming back again. If we go on quickly up to this 450 level, I'd be very worried that we're going to get a proper break. Okay, this is a market that feels like it's building up a bit of pressure, and that pressure is going to have to be relieved one way, shape, or form. That's either people giving up, trying to sell bonds, and the price blows through, or we head back lower in yields. So, yeah, quick return here would look a bit dodgy in my opinion. And if that happens, then we're probably going to see a follow through on the dollar as well. Dollar yen, even though this has been, quite a, I wouldn't say a huge move, but dollar yen's doesn't take much excuse. That's busting a decent move. Held this level here, and now we're back up at the 150 into the 155s, and we're just turning around this 155, 75, 76 area. It's not a huge level, but we've had prior action there, and we've got prior action there again. But as I say, if this risk move continues, then we're probably going back up towards that 157 level in not too shabby a fashion as far as that's gone. Kay, your charts have been missing for a while. You got any you want to show us, or are you still?
No, I can show a couple in metals and stuff. Yeah, I agree. In the meantime, with your US tens, also the twos are looking at levels, bit of confluence of fib levels as well. If you let me see if I can get up there. Share. Yeah.
Don't be doing no tech on yields. I'll ban you.
I'm sorry.
Don't be doing any techs on yields. I'll ban you.
Well, I mean, maybe not nothing like fancy, but there is a bit, and this area has played a part in the tens, right? This 4.5, and we are not too far, and the market tends to look at a bit of fibs, and they do play a role, and it is coming in just around your 450, right? So that's interesting. On the twos as well, there's a bit there's a bit going on just around 438, 440, and also look at this. This is what I put on like very well long time ago. We started to look at how many cuts we were pricing in for the Fed, and this shows you how the market has reacted really since end of September, when Trump started to run into a bit of a head against Harris. Then we had like data coming out as well, and we're all the way going back to 4 cuts right now, which is a lot less than we were pricing in going into right after the summer, right? So keep an eye on what's happening around 440 in the twos as well. I would say if we get back up there, whether we cap there or indeed break through, and both may happen at the same time, the twos and the tens. So they are interesting levels. Oh, okay, gold. And we had the recovery, and then we had the spike yesterday on Russia. Look, what I think about the long term is it is whatever happens. I still think that in the long run we are going to go higher. This is still my feeling. This is still how I look at it. Also with Trump, and I was perhaps wrong in my assumption that a Trump victory would straight away put a bit under gold. That was I was out in probably my timing there because of the dollar being so strong. But I still think that it may over time we should go higher. That's still my feeling. But in the meantime, we need to respect levels, okay? So what happened there is that we kind of respected the 100 DMA on the way down. It also had a bit of a traffic zone here in the low 25s, so that's held right now, and we're back above 2600. So that is short term, I would say, rather positive, but we need to respect, as we always say, we need to respect the levels. And if you look at on the shorter time frame, it's even clearer. But this 26, 35, 26, 40, 45 has been an area where the market is looking for clues. Okay, we've done a few bottoms around here, then we done a corrective bottom here before going up. When the way down, we stopped right around 2640, and then we broken below post elections. And now we are getting back up here, and we are holding. I mean, capped around there right now. Okay, this is still short to short medium term stuff, but I think this is an interesting enough zone to take into account. Okay, I think if we get back above this level, 2660s on the card, and if they go, you know what? If those 2660s go, unless it's just due to one geopolitical headline, okay. But if that goes on its own, then I think we may have seen a bit of a bottom, and we may slowly head back into the 27s. So that's how the outlook is for me. In the meantime, if yields here, if they continue to press higher, and we break above 4.5 in the tens, or above 440 in the twos, then I really wouldn't rule out testing lower. So keep an open mind here. That is what I'm going to do as well. Um, I was long. I stopped myself out, and I got back in at a slightly better level. But I'm managing it as usual, taking off slices here and there. I saw this happening. I took a little bit off here. I took a little more off on the lack of follow through. And now waiting to see if we get above there, or indeed we come back down and get better levels to get back in. Now, if we would see a real ramp higher in the US yields, also driven by better US economic data, once we start to get data post elections, okay, then that is going to be important as well for me for this whole plan. If we start to see better US data post elections, there is a real possibility we go back to really test 2500, or why not even the 200 DMA, somewhere around 2400. So we really need to keep an open mind now and keep your positions in check. This is what I'm doing as well. I'm keeping my positions relatively light right now. Interesting what's happened on silver. Recall I had this is from before the elections as well. Silver, no exception. Dollar strong. Silver came off, but we did hold the bottom end of my support zone. Okay, so that is an interesting one. When people say price is everything, well, I mean it is a lot. I'm not an adept of saying price is everything, because I always want to know the reason why we reach prices, and at what speed and so forth. But we did hold the bottom end, and look on. We first stopped at the top end of the support, and then we went to test the bottom end of the support just below $30. Went back higher, stayed around here for a little bit. This is a daily, yeah. It is not like 1 hour or 4 hours. It is a daily. We tested it again, and now we slowly, it's a back higher, but at least we are starting to move higher. I do think we are going to be in a yo-yo, because there's going to be a lot of stuff coming out. But also look at what happened here. I think this is important enough. Okay, same thing as in gold. If US yields continue to ramp higher, or would break those levels, we may see the test of the low 29s, which is going to be very interesting. I think this zone here, if ever we get there, also the 200 DMA, but that low 29s, high 28s, if we ever get there, this is going to be very interesting as well. But in the meantime, we can only say that it held. All right. I'm just want to keep an eye. Something that struck me this morning in the cable. We did falter just above 27, and as I said, the data points seem to have only the impact of when they come out and then the market reaction. But if one's looking at perhaps thinking that the dollar may turn lower again at one stage, and just thinking that in the assumption of keep an eye here. These are multi-levels here from the more medium term as well, and they come in and look at what we've done around here as well. Okay, we didn't reach back up yet there, but keep an eye on the 127, 35, 40 zone. 30, call it 30, 40. 127, 30, 40 on the cable, because we are still below, perhaps ranging a little bit, unless it breaks back below 126, that would be seen as negative. But this is one zone that when we will get up there, this is one that I'm going to keep a very, very close eye on in the cable. Okay, that is one. And the last one, because I've seen the numbers deteriorate in rand when I was away. Unfortunately, I didn't buy it. I wasn't close enough to my screens when it came back down after the Trump election. But I do think that if there is more issues with China, more issues with Russia, and as I've seen the data in South Africa starting to deteriorate a little bit. This is one now that I'm going to start to monitor very closely again. You see, there's a bit of support there, just below 18 on the dollar rand. I'd keep an eye on that one, and well, that is going to be looking much further into the future. But if don't forget that South Africa is part of the BRICS as well, and their proximity economically to China and Russia could be detrimental for the South African rand, unless whatever Trump puts in place is not as bad as expected. And with that, Ryan, I'm done for today, mate.
Thank you very much, mate. Yep, cheers. I'm just having a quick look, see what we got coming out today. Not an awful lot. So not much data to look forward to later on. Got the NBA stuff in about just under an hour. Keep an eye on the mortgage rate for that one. But otherwise, no, not a lot of data today to get our teeth stuck into. So we're going to be trading headlines and whatever else they want to throw at us. Yeah, exactly that, Matthew. I think that'll be the case. As I've been saying, if we go through 4.5 in tens, then that'll probably do for euro dollar at 105. And yeah, definitely not getting up to that 106 level anyway. Right, we should call that a day for today. Thank you very much. Welcome back again to Mr. K-Man. Thank you all for coming to the Flow Show, and we will catch you all tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.